Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Stephen Meade of MonetaPro. Stephen, thank you for joining us.
Yeah, thank you, Hall.
So what was your background before joining MonetaPro?
Well, I actually joke. I'm a lifelong entrepreneur, never had a job. I've started businesses since I was 18 in college. But the crux of it, when I was 22, I read 357 books over 6.5 years when I was running sales training for Travelers Group. And I used that knowledge base to build a system called a Bullseye Belief System. And I've used that system since the 90s to build 11 technology companies, had 3 that were public. So MonetaPro is just a continuation of companies I've started for the last 20 years.
Well, great. So what led you to start work in the FinTech sector and in particular using blockchain?
It's a double answer on that. I started a company in 1996, dating myself, obviously, in the credit card processing space on the internet. I was probably the first master merchant in the world for credit card processing and took that company public in 99. It's what went on to become PayPal. So the first time I looked at the space, not only FinTech in 96, but tried to build a global currency platform in the year 2000 to try and automate business payments. Coming out of the consumer credit card space, small transaction, blind buyers, sellers, a lot of fraud, business world had multi-million-dollar transactions. So we technically looked at the space as long ago as 2000, couldn't do some of what we wanted to technologically. Fast forward, MonetaPro, the current offering, is the same business idea from 2000, but technically some of the blockchain platform allows us to do things we couldn't do 20 years ago.
Oh, great. So what's your advice for people investing in this space? What would you advise them to do first before they write that check?
Well, to me, the space has got distinctions, meaning Bitcoin itself is just a classified asset. The world of crypto, for people who are investing, I'm probably the anomaly. I don't believe in straight tokens or a lot of the space of just straight token offerings. I like things that are a blend. So anybody investing, like the structure we've created with Shepard Mullen and some guys, we actually have an equity offering for family offices, and then we grant a liquidity token as a separate structure. And it's a financial way for you to invest. If you're investing in just tokens, to me, that's the speculative side. The advantages are you might get liquidity quicker than you would as straight equity. The downside with straight tokens is you lose some of the financial controls. So depends on what your horizon is for your investment. If you're looking short-term speculative like a penny stock, that's a different lens than if you're looking for something more valuable and long-term.
So this is a very fast-moving industry. Things are changing quite a bit on the regulatory as well as the business models and the technology. How do you see the industry evolving today? Where do you see it going at this point?
Well, again, I like to draw distinctions. We speak a lot this around the world. We were just in Malta talking about it. Blockchain, to me, is the technology component. It's no different than databases or the internet. So the blockchain industry as a whole is going to continue to grow just like the internet. The internet enabled 1,000 different sectors. Blockchain to me is the enabler. So people eventually will start investing again in a software or a service company that uses blockchain to perform a function. That's different than the token rounds, which are crypto ICOs, whatever you want to call the ABCs of that right now. That to me is a fascinating new way to fund companies. So there's a difference between the maturation of the blockchain industry as a whole for the technology and the funding side, which blockchain enables these new types of funding. And I think that's an exciting world. We deal a lot in Malta and Estonia. Countries around the world are looking at using this new technology to raise money. And I think the United States is patently far behind on that and continues to remain far behind, but it's trying to figure out how to use these new structures.
Well, great. How do you see it growing as far as companies engaging with it and the sector gaining traction with more applications and users?
Well, again, the funding side, I think more and more companies are going to look at using blockchain, if you look at the evolution of traditional fundraising, equity, you've got different stock markets, you've got the OTC, the NASDAQ. Then this world of crowdfunding came out with gifting platforms. The ICO token world allows a company to raise money very quickly for projects that'll let them scale. So I think the jurisdiction side of that, there's going to be more restrictions and regulations put on how companies use the technology to raise money. I also think the onboarding is going to get easier for company or for consumers to be able to sign up and quote participate. The participation is really their ability to buy crypto tokens. So whether it's buying Bitcoin because they want it to go up or buying Ripple XRP, there's these different tokens, which to me are like glorified penny stocks. You need an ability for retail consumers to participate in this world easier. And right now that onboarding is very difficult. You have to set up wallets and send in identifications. And I think there's a streamlining, just like depending on the age of your audience, the old days of getting on the internet were a disk from AOL that you had to plug in and wait for things to connect. The onboarding to the internet was very slow. And as that onboarding to the internet got quicker, more and more applications, more services were built and more value. I think the blockchain industry as a whole is kind of the same way.
How do you see the regulatory agencies coming in and helping evolve the laws to these new technologies and tools versus just stonewalling and saying it doesn't fit? It seemed like several years ago it was just stonewalling, but it seemed like they were moving in a direction that they would start to evolve the laws to take these things into account. Where are we with regulatory today?
Yeah, so if we talk about the U.S., Wyoming's done some really fascinating things sort of at the front edge of the way the United States is supposed to work. The states are supposed to experiment, and then the federal government implements. So Wyoming's done some really amazing things with the senators out there on blockchain and regulation and some of the restrictions. But where we're trying to get the government to go is it took many, many years for the United States to pass something called the Jobs Act. And anybody that does investing may be familiar with it. The Jobs Act basically regulated the ability to crowdfund equity, meaning you didn't have to go through these traditional, what are called Reg D and Reg S, a lot of paperwork. The Jobs Act allowed a company to go out and raise equity from a crowd with different, still restrictions, but a different level of restrictions and paperwork. We think and we hope and we're trying to massage the regulatory path down that same framework where using crypto and tokens, it's really a new way to raise money. The concerns for the regulators is how do you protect the investor? How do you protect the grandmother who, might put $10,000 in and lose it? Well, it's that same aspect. You don't protect grandmother who goes down to the casino and drops $10,000. But from an investment standpoint, the regulators are trying to protect that investor. The Jobs Act basically accomplishes the same framework. So I think as the regulators move and get a little more comfortable, they're not going to look at crypto technology, blockchain as a different animal. They're going to say, oh, it's very similar in structure to things they've created before. And hopefully they'll move that jurisdiction under some framework that they've already been comfortable with.
That sounds good. So as far as the challenges in starting a business in this sector, we talked about the regulatory, but what about the technical challenges? Is it getting easier to work with these technologies like blockchain, or is it still a bit of a challenge to make those things work?
Well, again, I think they're two mutually distinctive questions. You can start a company in the blockchain space. There is no regulation of blockchain. Blockchain is the technology. So, for instance, with our company, MonetaPro, we use blockchain to update an inventory module. It's a glorified database. There is no regulation at all in how we use blockchain from a service capacity. So companies that want to use blockchain to create better contracts or new forms of PDF or tracking food through a supply chain, there's no regulation at all. That's just implementation of technology in a new capacity. If you want to use blockchain for raising money, that lies the distinction of regulation and jurisdiction. And from that standpoint, the United States is struggling with how do they classify the asset, even down to terminology. Whatever the IRS is going to claim the asset is called, the SEC, FACTA, FINRA, everybody's going to have their own jurisdiction They're going to create their own classification and label. And I think the United States is going to be a mess for a long time from a fundraising capacity. From the blockchain capacity, there is no regulation. It's just a new technology.
Well, great. So anybody that's starting a business in this sector, what do you think the challenge or the main challenge they face at this point would be?
Well, if you're starting a business, to me, the fundamentals of starting a business are the same. Size of market adoption, can you build a technology? So if you're a startup and you're using blockchain as part of your story, your challenges don't change. Whether you build a market or whether you build a technology with or without blockchain, you need to build a technology that works. You need to get customers that will accept it, and you need capital to expand it. Those things are basically fundamentally the same. If you're using it again to raise money, that's a different story, because then how do you classify your token? Do you use a token in the international markets, or do you keep it on shore, meaning the United States? The United States does not allow cryptocurrency tokens to be used as a way to raise money. So if you're looking to move into the quote blockchain space because you've heard of people raising $20, $30, $40 million, that's great. That's a different issue than if you're trying to build a business, build a software, and get customers. That side of the startup world doesn't change.
So how does MonetaPro fit into all this landscape?
Well, so what MonetaPro is, Hal, thank you for asking. MonetaPro, there's a $17 trillion existing market of what's called corporate barter. And these are big companies like Ford and Caterpillar and United Airlines. These big companies trade assets, meaning Ford has a bunch of cars they want to sell. They don't want to discount them, put them on sale, pay taxes. They'll call their friend at the computer company and they'll give them $1 million worth of cars for $1 million worth of computers. It's like the old days of barter. I've got chickens, you've got milk. If you want chickens and I don't want milk, you need a portability, you need a currency. And the first currency in the world was the Moneta seashell, which is where the word MonetaPro comes in. So what we've built is a marketplace for big companies to do trade. And the distinction, again, I'm big on distinctions. If you think of Amazon for a moment, Amazon is a marketplace, primarily business to consumer, $84 sale. Amazon exists without blockchain. Full stop. It's done extremely well without blockchain. We've built a marketplace that exists without blockchain, but when a company like Ford transfers 1,000 cars to another person, their inventory module, their accounting system, primarily what it's called SAP and Oracle, these big systems are now out of balance. They have 1,000 cars that need to be accounted for. And we've partnered with IBM. We're one of the first companies in the world. Our invoice writes to IBM distributed ledger, the bottom layer of the blockchain. And now when a company transfers assets, our inventory system, our order, can update their accounting module. So step one, we remove their inventory. Step two, we write what's called a smart contract. Again, blockchain to me is just a better PDF. But we write a smart contract to prove those assets were transferred to a third party. So we've built an enterprise level solution that uses blockchain to solve two components. Some of our challenges have been, again, this distinction that there's a conflation. If you say you're a blockchain company, people go, oh, are you a token? Are you like Bitcoin? Are you this? Are you that? I think the industry, and especially people that have written about it, that's why I appreciate this conversation, Hal. I don't think the industry's done a good job of messaging and drawing distinctions of what the technology does. So we're basically a FinTech marketplace for enterprise, and we do use blockchain, but we use it for a very specific function.
So what are the challenges you face in implementing this solution, given that that's something that people consider, but what's going on out there with your progress on this business?
Yeah, no, I'll answer that more from an entrepreneurial standpoint. Is we've built the marketplace, and again, it's like I said, it's like an Amazon for business. So that existed without blockchain. But for us to perform this function of updating an inventory module, we had a bunch of decisions as a small company, as a startup. I could, A, build my own proprietary blockchain technology, and that gives us, quote, enterprise value. So I could go to an investor and say, oh, we have proprietary technology. B, we could put it on a bunch of different blockchains. So we investigated, for anybody that's in the market, We looked at Stellar. We looked at EOS, which I love the team there. We looked at graphene. We looked at multi-chain. We investigated a bunch of different existing blockchain solutions that we could integrate into our technology. And then 3, we actually landed on using IBM technology, not because it was necessarily the best, but it gives us credibility. So when we go talk to a Ford or a Caterpillar, we're saying, oh, we're doing inventory management using the IBM blockchain technology. So we had to look at everything from enterprise value, proprietary building, to existing new technology that's out there, to an old school company like an IBM that might not have been the most new and sexy, but it gave us credibility going into the corporate markets. And again, that was a lens we had to kind of go through this exercise to figure out what we thought our best solution was.
So what's the next step for your company? Where are you going next with it?
So ours is 2 steps. One, the MonetaPro market itself is starting to roll out with targeted customers, and it's airlines, automotive, manufacturing, food and drink. So it's the biggest computer companies in the world, these large companies that are already trading. We're in discussions with quite a few of them about coming onto MonetaPro as a new marketplace rather than doing the trades manually. So one of the lines is actually this aspect of rolling out an enterprise solution to large global conglomerate corporations. That's that angle. The investment side, what we did is different. We are doing another round of funding. It's small. It's relatively private, but we created what I think you, Hall, and your audience would find is a really unique structure. So we created a split structure between traditional equity for things like family offices and venture funds, and then we created a separate liquidity token using this new blockchain aspect. And we put the liquidity token out in Malta and became one of the first regulated, jurisdictional tokens in the world under the new Malta regulations to be able to use the token side as a way to raise funds and give liquidity to our investors. So we're in a funding side with Malta on an international operation and a customer acquisition with MonetaPro on the marketplace.
Well, do investors get both, or do they choose, or how do they decide which works for them?
Yeah, and there's been a lot of, I don't want to ABC alphabet soup the conversation, but within this world of blockchain, there was these things called ICOs, which were initial coin offerings, and then there's been IEOs, exchange offerings, and there's STOs and security tokens, and it's a lot of moving parts and things that didn't have good framework and people weren't comfortable with. And again, I've had 3 small cap public companies. We've raised money for a bunch of our companies. So I did what I call retrospective evolution, meaning I looked at what works in the past. And what's worked in the past with funding is equity and what's called warrants. And a warrant allows an investor to have the option to get more stock at a specific price at some point in the future if there's what's called a liquidity event. And I looked at that versus what was making the rounds in the blockchain space between what are these things called SAFEs, which are part equity, or SAFTs equity. It was all too confusing. And we simplified the offering. It's straight equity at a set price and a separate agreement in what we call a liquidity token option or grant. We grant the investor 100% coverage in the liquidity token. It's not an either or, it's a both. So they get the equity, that's the long-term structure, traditional hold. They get a liquidity token that they own the option to take possession in the future. And again, distinction, the aspect of take possession is a critical distinction. A lot of people doing these token rounds and raising money with crypto, the minute you get an asset, a token asset delivered to you, you own it, and nobody knows yet what the IRS is going to classify that asset as. So what we did is said, let's take that responsibility and liability out. The investor gets a separate option for a token they don't own, they don't have possession of. But if MonetaPro is successful in listing on an exchange, which we're pretty close of through Malta, we will have liquidity on the token exchange. The investor can then say, we want to exercise the right. We deliver that token to them. Preferably, we'd encourage them to set up what's called an SPV. Again, if your audience is within the financial realm, an SPV, they would understand, stands for a special purpose vehicle. So the investor would set up an SPV in primarily Cayman or Singapore. They take option. We deliver the token from our treasury wallet directly to the special purpose vehicle, which takes ownership, and they liquidate through the SPV, and they get their liquidity event, and they get their money while they still own the equity, which is the long-term value in our company. So again, where I think the future's going are these new types of creative structures that allows an investor not either or, but both equity for the long-term hold and liquidity for the short-term value.
Well, it's quite a novel structure. Looking forward to seeing how that plays out in the last few minutes that we have. What else should we cover that we haven't?
Really, I just think I hope people get excited about the industry, but also learn the differences. Blockchain to me is just the technology framework like the internet. But if somebody wants to look at investing, look at these new forms of what are called cryptocurrency, to me, again, are crypto tokens, which are basically, they're glorified penny stocks. Most of the investors who are investing for value, the OTC market in the United States is more risky, more volatile, higher risk, higher return. That's where the blockchain technology token market's going to be. If you're a long-term structured investor and you want value, you're going to go buy stuff on maybe the NASDAQ, probably the stock exchange. The crypto market is not that market. The crypto market is a startup entrepreneurial market for the investor who's looking at strategic value and speculation around projects. That's why I think this is exciting. And the other component I'll leave with this, a lot of the reason companies fail is lack of capital. If these new structures allow a company, instead of raising $2 or $3 or $5 million, to maybe raise 10 or 15, if it's a good management team and a good project, that company will have a longer runway to potentially be successful. So my hopes for the industry is that more projects come out that are successful game changers and are capitalized properly and just moves the industry forward to the next level.
Well, that's great. How best for listeners to get back in touch with you?
Yeah, so MonetaPro.io is the corporate site, Moneta, MONETAPRO.io. And then for me personally, it's easier to find me at what's called the Bullseye Guy. I'm affectionately known around the world as the Bullseye Guy, about a target. So thebullseyeguy.com. And on that website, it's got all of our projects listed. I've got shortcasts and podcasts and definitions on the industry and a lot of information designed to try and help people feel more comfortable as we move forward.
Well, great. We'll add those to the show notes. We want to thank you for joining us today and hope to have you back for a follow-up soon.
Sounds great, Hall. Thanks so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.